Good morning, everyone. Welcome to Concurrent Technologies interim results briefing. To ask a question, please click on the raise your hand icon. There'll be room for questions at the end of the presentation. We'll now hand over to CEO Miles Adcock, who will start the presentation. Thank you, Miles.
Thank you, Isabel. Good morning, everybody, and thank you for being here and your interest in Concurrent Technologies PLC. I'm joined today by Kim Garrod. It's the first time she will have presented results with me here, and she's our new CFO. You'll hear more from her later. Next slide, please, Isabel. So a reminder of what we do as a business. On the left-hand side of this chart, we describe selling, designing, manufacturing a range of plug-in cards. For the 38 years of this business, we have designed and manufactured things called single board computers based on Intel processors. We concurrently release to market our rugged, high-performance single board computers at the same time as Intel launched their product to market. We now design and manufacture a wider range, increasingly wide range over time, of plug-in cards. A single board computer is a type of plug-in card. So that's been our core business for a long time. We will be widening the range of products in these plug-in cards. To the center of this chart, then, we will increasingly offer value-add software and software-related services to enhance the value of our card products to customers. And then on the right-hand side of this chart, we now also will deliver design, manufacture, COTS and custom systems. A system being a chassis or a box, which includes a number of cards, whether developed by us or somebody else. So for the first time now, we are positioning ourselves as absolutely a systems company with multiple different plug-in card types. Next slide. Market segmentation. This is very similar to what we presented last time. So the US is our single biggest market at over 40% of our revenue for the first half of 2022. Europe then is also very large for us. UK has been about 10% of our revenue for the first half, and Malaysia is notable for this business, primarily or singularly because of one reliable large contract that we have in that region. 76% of our revenue has been defence related, with comms being substantial as well. And what we'll see in the future here is a growing medical segment, as this year we secured a $2.3 million purchase order from a Fortune 500 medical company, and we anticipate similar levels of procurement for several years. And then on the right-hand side, then, that just refers to the size and nature of our customer base, noting that we're just halfway through the year, so those numbers will grow substantially as we work to year end. Next. The markets in which we operate are vast relative to the size of this business. So whether it's a global embedded systems market, which is many tens of billions, or even if we look at a more focused defence plug-in card or defence systems market, these are still very, very large markets in which we operate. And those markets have modest growth in themselves, but we're focusing on the higher growth aspects of those markets. So for example, a form factor that we use is something called 3U VPX. Doesn't matter what that is, other than to say that segment is growing at approximately 20% per annum at the moment. So for us, primarily, it's about securing market share where we have not secured it before. Next. And a reminder of the investment proposition for this business. It's a long-term provider of highly value-adding products, mission-critical products, to customers that are reliable, solid, and growing. We have a very strong balance sheet, which gives us a platform for investment. So this business is now designing itself to scale and grow, utilize that strong balance sheet, which is a stance that is different perhaps to prior years. We've completely refreshed the management team. We've made a number of extremely experienced hires in the executive team, including Kim, who's on the call with us. And we anticipate growing and developing the business over the coming years. Next. I'll hand over to Kim Garrod.
Thank you. Good morning, everybody. So we've had a particularly Difficult first half, solely driven by component supply issues, as you'll see from this slide. So revenue was down 1.9 million in the against the first half last year. That is just purely down to component supply shortage. We have an exceptionally strong backlog and order book, and it's the issue now with getting them outside the door. EBITDA is down to 0.8 million from 2.3 million last year, again solely driven by that top line. If we don't get the revenue volume, then we struggle to make a profit on the bottom line. Profit before tax, we're basically at break even, again driven by the revenue. We've continued to, it's very important everybody realises we've continued to invest, which is exactly what we said we would do throughout this. So we've invested in talent, we've invested in our facilities, and we continue to invest in R&D, and we will continue to do that. Eventually the revenue will come through the top and we'll be back to a profitable position. Earnings per share is a reflection of the low profit, and dividends, unfortunately we've had to reset to 0 for the first half. As a board decision, we agreed that we would only pay dividends out of earnings. It's the right thing for us to do to protect this company at this time, to ensure that our cash is used for our investment program, our stock, to ensure that we're ready to go that the minute the component issue releases. Cash has taken a significant hit in the first half of this year, and that's predominantly from investment. A few other points to note here. So we have qualified our Next Tech as our US build to print partner in the first half of the year, and we'll be looking to be using them hopefully into FY23 to give us some extra capacity. We need capacity both to surge when components do become released, but also we need capacity for our ongoing growth strategy. We've had 3 product launches in the first half of the year and we're on track for 8. We have announced a 4th one in half 2, and there will be the further coming of the rest of them. 2.3 million order, we announced that earlier in the year from a Fortune 500 company, as Miles alluded to earlier, and that's a really significant win for us. It's about 10% it will drive into the medical market. The fresh management team all in place now, so we're fully up and running, and all driving in the same direction on the growth agenda. Everything about these results, which I know appear quite disappointing, everything about the results are around component shortage. We don't have any other underlying issue with the business. And then, as I stated before, the interim dividend suspended at the half. Next one, please, Isabel. So it's really important that we all understand where we've gone to on the investment. So Miles has spoken to this before. We have a desire to release 8 products this year. It's more than a desire. We have a plan to release 8 products this year. That's about double what we were doing before. And what we have to remember with the products, they're higher specification. We've put a lot of improved processes and analysis around our products to ensure that they're right, and that when we do get them out there, they are of the best that we can provide. And that's meant we've invested in testing analysis and software and consumables, because we're doing more testing. We're doing improved testing to ensure that we give the best to the customers. We've invested a lot in contractors and talent. So sometimes we need to hire the best contractors to enable us to deliver some of the really hard work that goes around these launches. And also we are investing in engineers. That's been reflected in our increased R&D capitalisation. So last year in half 1 we capitalised about 900k. This year we're at just under 2 million for the first half. And this is reflected in our increased orders, and there's a slide later on in the deck that you'll see where actually we've converted to, instead of 20% of our orders being new and current products, we're now at 80% in the first half of the year. Functions, as Miles has alluded to in the past, we have invested heavily in functions. You know, the business didn't have a people function before. We now have a proper integrated function that's really driving the best for our people. We have the introduction of a legal and commercial function, which didn't exist, and that's highly important as we go into different types of sales. So we go into systems, that's completely different types of contracts compared to standard selling boards. And we've introduced a really key function in terms of supply chain management, which is providing dividends around our supply, our sourcing of components. I know it doesn't feel like that way, but it is. We're really set up. We have much bigger supplier base. We have more professional function in that we can, you know, we're driving well on cost, etc. It's just a very, very difficult time for them. Leadership team, we've invested in 6 new hires, of which 3 of them are new roles across the leadership team. And sales are very, very important one for us, and we can see that coming through in the order book. You know, we've invested in some really high caliber people, specifically one in the US who's comes from an ex-competitor who is excellent at the systems line, and we absolutely need that in line with our strategy. And actually, for the first time ever, we have recruited a UK sales manager to try and enhance the UK proportion of our revenue. And then the Theale office, which is now open, running, we opened that around investment to attract talent. M4 corridor is really important for that, and actually that's starting to pay dividends, and we've had 8 new engineers start in the last month to 6 weeks, which is really important. Next slide, please. This is the slide I was referring to in terms of our transformed product mix. It's really important that we didn't continue on the line we were on, in that we were reliant on last time buys. That's not a growth business. So, you know, we put all these investments in place. We've concentrated heavily on the R&D side to ensure we have new products. And actually, you can see that replicated in this graph, where 80% of our orders now are around new and current products rather than end of life or last time buy. That doesn't mean, of course, end of life or last time buy is any less important to us. It's just we would see that as an upside to our performance rather than actually it's driving our performance. So that's a really, really key and important slide for the future. So this is our 5-year view against our H1 2021 and the ones before that. Obviously, it's not been a great picture, solely, as I stated before, due to component shortage. One key number I want to pull out there is the order intake. So even though it looks like we're significantly down from last year, well, about 10% down from last year, in fact, last year included a 5 million one-off last time buy sale. So actually, when you remove that from the equation, then we have performed much stronger in terms of plugging that gap with current and new products. And actually, as a post-trading update, that number of 14.2 million now for FY22 is up at 20.8 million as at the 12th of September, which has resulted in an increased backlog of about 24 million. So really important, order intake and backlog are really important to us at this time, because the revenue will come the minute components become available. And the orders are the most important bit, because you need that for the future. So we have every faith that this business will come back online into FY23 as the components open up. We've had a lot going on with our supply chain, as you can imagine. A few of the things to remember, because it is important that our customers rely on us for highly assured components. So that does restrict where we can go for components. They have to be, you know, highly tested to certain standards. They have to be quality assured so that we can, you know, our customers have great confidence in us in supplying high caliber components. And actually, many times that's actually written into our contract. So we do have to provide documentation that shows this assurance, which is really important. So we are limited in where we can go in terms of third-party brokers, grey market, etc. So we're very, very reliant on original component manufacturers original equipment manufacturers and franchise distributors. We're absolutely reliant on those type of people. Where we can, if we are with a supplier, a customer that doesn't have those limitations, we will go where we can go. That still doesn't mean that we don't spend a lot of time around testing and assurance, but we do have more options. But if you remember, 76% of our revenue is defence related. We are tied into much higher assured components. So it's a really important point. And actually, what we've also been doing in terms of the supply chain, we've been really careful about how we're managing our stock. So we have invested in stock quite heavily, and actually you'll see a rather large number in the accounts, which is about 9.4 million our stock is up to now. That's very deliberate. So we deliberately have sourced components where we can, and actually that stock represents probably high 90s, mid to high 90s% of the components we need. So the problem we have now is the really specific things that enable us to get, you know, 100% of a board able to be manufactured. And so what we'll see is as these specific components come in, the stock will drop quite quickly because, as I say, the stock's quite heavy at the moment with large amounts of components ready to go. We do need, you know, unfortunately, with the type of business, we do need 100% of our components for a board. We can't send something out with one missing or two missing because it won't work. So we're not like a, you know, the automotive industry where I've heard that, you know, they can sell with one key instead of two. We can't do this. We need all our components, which is what's holding us up. The other thing we're being really, really careful about is price. So price, you have seen an impact on the price in terms of our gross margin dropping about 7%. We will not pay ridiculous prices when it doesn't warrant it. So we're really careful about where we buy from and how much we buy for. There are times where customers are happy to take that increased price because it might be holding something else up in their chain, which is fine, but we are really careful where we are investing our money, and it's not going to be on overinflated prices that don't add anything to us. Next slide, please. Key points for FY22. Most of this I've already said. So, you know, the global supply chain has caused a significant deferment of our product revenue from FY22. We don't know when that's going to end. We are seeing signs of it in terms of, for instance, 6 months ago, we were struggling to get some of our basic resistors, capacitors, etc. We are now heavily stocked in our basic requirements, and it's those small specific things that are holding us up. So we are hoping that as we go into FY23, we will start to see that release. As I stated earlier, 20.3 million backlog as of the 30th of June. That was 13.5 million when we came into the year. And now, as at mid-September, we were currently at 24.2 million. So significant order growth. Customers want us, they're not stopping buying from us, and they're being very patient with us because they understand the global supply issue. Order intake, as I mentioned there, we've moved from 14.2 million at the half. We're now up at 20.8 million, another good indicator that we're all going in the right direction. We have completed our US production facility that will increase our capacity. So we've completed qualification on the facility. And as we need that capacity, we will look at turning that on into FY23. 8 new product launches. We are on track, and we absolutely believe in all those products, and we are seeing sales of some of those products that we've already launched. Continued development in our new systems business, really important, and we're hoping that you will see some announcements in the second half of the year as we start to move that systems business forwards. And, you know, on both Miles and my behalf, you know, we have the highest ever backlog, and we have the highest confidence in turning this financial performance around as soon as these supply issues ease. It's all there. We just need to manage this supply issue and get through it. Next one, Miles.
Thank you, Kim. So we talk about assembling in the United States. This is really important for us for 2 reasons. One, it gives us capacity, broadly double, and it gives us access more fully to the US market. President Biden has recently declared an increase in the required US content in federal programs. And it is absolutely the case that if you're not physically present in the United States as a source of manufacture, then it is much harder to secure access, particularly to the larger programs. So very important that we did this. Nextech, the partner that we have chosen, have very high caliber people and equipment and experience. They're specialists in low volume, high mix, which is what we are. And they have all of the necessary accreditations and qualifications that enable us to sell our extremely high performance and highly assured products in North America. It's no trivial thing taking a business that has designed and manufactured its own product for decades and enabling it to pass documentation to a third party, which works. And that's exactly what we have successfully done in qualifying Nextech. Very important. Next slide. Systems then. So we've talked about systems in the past as being the direction that we're heading in, and we're making excellent progress there. So whilst these photographs on this slide are representative, they are pictures of real product being designed or near complete to design. So I'll just talk through it briefly. There's two things we focus on with regard to systems. On the left, there is depicted one of our single board computer cards, the leftmost picture, and a recent product of ours, which is a storage card. So those are ours. And then on the right are depicted partner organization cards. These are partnerships that are well developed now for things such as switches, FPGAs and graphics cards, which often also exist in systems. And with their agreement, we will now lead on integrating all of those various cards into a system, which is the green box at the bottom. Again, that's not just representative, that is a product well through development. On the right-hand side then is a slightly different set of systems, which are a little simpler, smaller form factor, specifically designed with an end use in mind. And again, these are pictures of well-developed in development products. You can anticipate us launching systems products throughout H2 towards the year end. So this is now real, not past tense. Next. Not future tense, I meant. So really, just to reiterate the things that we've made progress on, this components issue masks the genuine progress against all of our strategic intents that we've made in this business. Substantial focus on R&D. It's really important that we deliver the core of what we said we do. We say we deliver Intel-based single board computers at the same time concurrently as Intel do. Important that we do that. Prior years, that hasn't been the case. Going forwards, we absolutely strive for it to be the case. And as you've seen, we're adding more cards, more differentiating software, and now more systems to the marketplace. This will increase our opportunity to secure market share. We've made good progress there. It is also important in R&D that we develop more unique differentiating capability, an example of which is the position, navigation and timing card that we launched earlier this year and is generating significant interest in our home markets of the US and the UK. I've talked to the importance of Made in America, and we've secured Nextech now. And systems we've made great progress on. Yeah, during the course of the first half, we've secured some really experienced talent, developed partnering conversations to a level where we're now able to imminently launch to market systems offerings. And then finally, we've developed significant capacity. We'll be running a double shift in our Colchester manufacturing plant in October. We had always planned to develop additional capacity in order to scale and grow the business. That capacity will now be used to surge, rapidly deliver products as the components do become available. Thank you.